here in the explanation of the cut. Let's talk about today's rally and do some trading. Alan Nuckman joins me in studio, the Chief Market Strategist at BullseyeOption.com. Good to see you in studio, Alan.
Hello, Oliver. We needed to change things up a little bit.
Yeah, change the pace.
Yeah, you got to get something different mojo. And I'm thinking here the markets are getting less worse, if that's a proper phrase, which is not. But there are some positives from last week. Let's look at Friday. The VIX was actually down when the market made new lows, which is interesting in itself, 20% off its highs for the year. And the dollar index, again, did a weekly key reversal where it made new highs on the week and had a lower close. So there are some signs that things could get better. And let's remember, it was just 6 weeks ago that we were at 4,300 in the S&P. And that was, at the end of earnings season. Now we've got earnings season coming up, and they're only looking for a 3% earnings growth. So it's got a very, very, very low bar to step over.
True. The way you've been trading, you haven't been buying, getting super bulled up on the index for a while. You've been trying to pick trades that are either showing strength or either way beaten down and the sector is decent. You've been trying to snipe spots, even though you strike an optimistic tone. It's not like you've been out here buying the market every day. So.
Right, exactly. So you've got to be very selective until we get the macro turn. Yeah. And we've been doing so. And most importantly is all of the options that we've talked about in the last weeks and months really have been January options. So they always had at least 3 to 4 to 5 months of time. Yeah. And that's, that's my thinking, is you want to be there and not try and pick the exact turn of the market, but you've got a choice. You can buy stocks that have just been crushed, or you can buy stocks that have been better than the rest and see if they can follow through. Those are your two trading choices.
VIX right now above 30, to your point, kind of an interesting way it ended the week, but it's still pretty high. Like if you look at COVID, I had a 3-year chart up this morning. There's nowhere really to go for VIX unless we're going to have a giant banking crisis like they're worried about in Europe?
Right. We bounced off to 20. So we've been between 20 and 30 for, many, many months with, some few exceptions. We did not make new highs in the VIX, even though the market continues to print new lows and new lows and new lows. So I can only trade what the charts are telling me. And the charts are telling me that fear is not there. Now, we haven't had a capitulation really, but maybe today is, because in the overnight session, we were beaten down, made new lows. And if we, have a real strong close, that could be the start of something. Again, earnings are coming up very soon to remind people that corporations are not America. Corporations, they're not the average person that's worried about, rising rates and, their mortgage payments and stuff like that, or inflation. Corporations have the earning power and they've got the margins.
Last week we got a little worried with Apple report about not meeting production, Nike having to cut. The concern here that some of that fundamental story might creep in, but in the meantime, to your point, we're making lows.
Okay, Apple's only going to make $20 billion instead of $25 billion for the quarter? Is that really an economic worry?
Tesla fell short by like 20,000.
But they produce more cars. But they produce more cars than they ever have.
Absolutely.
So turn that frown upside down. There's always a positive. You have to understand the psychology of the market right now is so negative, so oversold, so beaten down that at some point there's going to be some sort of relief rally. The key is, do we get any follow-through? The last time we got up to the 200-day moving average in the S&P, the last 2 times, in June and back here just recently, we weren't able to punch through that 200, and then we came back down.
What does capitulation look like to you as a trader?
I used to know what it looked like, but we haven't seen it. Right. It's just been as concerned people are on the street, any person you talk to, any relative we talk to about the markets, they are so worried and so concerned, even though we're, 20% off the all-time top, and we're still up 65% from the COVID lows. But the market isn't acting like that. You're not getting the 5% moves that we used to see in capitulation. We get 2% moves.
Yeah, it's been a steady, constant drip, basically.
Grind.
Yeah,
let's use the word grind. And I've been ground up, but I'm done being ground up.
I like that. All right, so in good optimistic fashion here, you've got a long pick, something you're buying some calls and tell me about SUNPOWER.
Okay, SUNPOWER is around 23.25 right now. It's a 20% pullback. So again, I'm looking for a little bit of a pullback after a big run. It's a strong stock above its 200-day moving average. It's 80% off its May low. And it's up 60% in the last 2.5 months. So there's some strength in this environment, which is rare. But it also is 60% off the 2021 top. There was a big gap and go. It rallied from 18 up to 28. Yeah. In the 23 area where we're at right now is an important midpoint to look at. So the way I'm playing it with my usual in-the-money, boring, straight conservative strategy in the money options, the 18 call, which is deep in the money, obviously, it's 5.25 in the money. It's trading for about 750 or so. So it's got 160 some days of time, and it's only $75 more expensive than the January option. So it's a chip in play that's got plenty of time to see how we can turn this market at some time.
I mean, it's doing just fine on the air. I think everybody's happy in a stock that's a little change to higher, and it is by about 8%.
Yeah, how many stocks could you put in that basket?
Pretty much everything in the solar group is one of them.
Right.
But when you got the government spending, that's the place to be.
Listen, we've had this conversation. I am not a why guy. I'm not why the stock's going to move. I'm like, how is the stock going to move? You don't make money or you don't make points for predicting what the rate hike, is going to be the next movement, or is it going to be technically a recession or not. We get paid. We make money from predicting how the market's going to move. You don't make any money from being right about all these ancillary predictions.
Sure.
It's binary. It doesn't matter.
Just I
would like to be wrong with my opinion, but right with my stocks.
Right. Hey, as they say in cards, better to be lucky than good.
Yes.
All right. Appreciate it. I'm not good to catch up. Glad to have you here. All right. The trade in SunPower, buying the in the money calls. 18 strike? 18 strike. Okay. Let's talk some more energy as a thematic play that has been working. Many of the futuristic tech trades of the last couple of years have gone bust, but one certainly stands out. We'll check out a few other themes that maybe haven't performed as well, but could have a time once again if markets find support. They're doing that today as equities are up across the board. Bonds rallying big, looking okay for bulls to start the week.